accuracy rate. Now, if this is making sense to everybody, I need you to please type an 888 for me inside of the chat if that is making sense. This is how the math works. This is how the numbers work. This is why trading is so phenomenal, because there's such a great opportunity here for you to be able to learn in the market, for you to be able to earn in the market. But it begins with education, and this is how it begins. Now, what we want to do is we want to now change the tempo from basic trade management, because you're going to learn more of this stuff in details in future courses. But we want to go from basic trade management, basic risk management, to now we want to talk about trade management. The difference between risk management and trade management is that risk management are those metrics, like what's my stop loss, TP, what's my risk per trade, what's my risk to reward, those three metrics, right? You're automatically thinking about that when you enter every trade. That's your risk to reward. That's your basic trade management, your basic risk management, pardon me. Your trade management is now what happens when you are in the market. So as an example, if you got into the gold trade, okay, if you got into a gold trade and you're now in the market, you have the stop loss, you have the take profit, you have your risk to reward, everything is correct. It's all good. It takes 2 seconds. What happens is, now that you're in the market, what happens when you're in the market? Because when you come in the market, you could be somebody who's highly accurate, but if you don't know how to manage your trade, you can go from in profit to then hitting a stop loss. You can go straight to the stop loss, all the worst case scenarios, right? So if you don't know how to manage your trade, once you're in the trade, this is the second thing that will kind of like mess you up. So if anybody here has already been trading and you say, man, I've been in the market so many times, there were so many trades that were in profit, but I didn't properly manage my trade and it ended up in a loss, right? We don't want that to happen. So this is called trade management. So forex trade management refers to the process of strategically handling a forex or foreign exchange trade to optimize profits, minimize losses, and manage risk effectively. And this involves various techniques and strategies employed by traders to control their trades and make informed decisions. Okay, effective trade management is essential for long-term success in the forex market. So I broke down trade management into 6 key factors: learning how to break even, learning how to go risk-free, which is almost the same thing, learning how to trail your stops, learning how to take partials, potentially stacking orders when you know how to do that, and avoiding news. So let's get into this very quickly, okay? So what is break even? So break even in forex refers to a trading scenario in which the trader's position neither gains nor loses value. So long story short, let's take a look at the example here. Let's take a look at this gold trade from the day before yesterday, okay? We got into the gold trade right over here. Now, once the trade starts to move into profit, you can adjust your stop loss, and you can have your stop loss to become the same exact price point as your entry. Or you can actually take your stop loss and you can put your stop loss a little bit past your entry. And what this means is that once you are in profit in a trade, in the event that the trade turns around and reverses, right, and goes against you, it will stop you out at a break even. So you won't make any money, but you also won't lose any money. So this is how you can kind of like survive the market. I love getting into a trade and then immediately making sure that it's break even. So in case it's a bad trade and it comes back against me, I'm not losing any money. That's something that you guys need to do. Now, the other side to the coin of break even is risk-free. Now, risk-free trade, or I'm going to go risk-free on a trade. The only difference between break even and risk-free is that in a break even scenario that you see over here, this is when it's a bad trade and it goes against you and it goes back to your entry and it stops you out at your entry. Risk-free is when the market is continuously going in your favor. and you now take that stop loss and you do the same thing. You take that stop loss and you put it at your entry or a little bit past your entry, and you just let the trade run, because now you are risk-free. You will not incur any loss in case the market pulls back against you. So that is risk-free. It's almost the same exact thing as break-even. But again, the only difference is that risk-free for me means that it's actually a profitable trade, right? And it keeps going. Now, from risk-free, we now want to start doing something known as trailing our stops. So as you see our screen, I took the stop loss from the entry, and then I now put the stop loss in profit. So in forex trading, a manual trailing stop refers to a stop loss order that the traders adjust manually as the market price moves in their favor. So as the market keeps going in your favor, you're going to take that stop loss and you're going to keep putting that stop loss lower and lower and lower and lower and lower, and you're going to keep it very close to the market in real time. Because what happens is you get to do something known as a profit lock-in. So the purpose of a trailing stop is to lock in profits as the trade moves in your favor. So by adjusting your stop loss level, whether it's upwards in an uptrending market or downtrending in the downtrending market, this is going to help you secure the gains and protect the capital in case the market reverses against you. So what do I mean? I mean that if, let's say you're in this gold trade and the market is now 40 pips in profit, if the market starts to go against you, would you rather have this market go all the way back to your entry and then you break even? Or would you rather put, as an example, your stop loss 20 pips in profit? So now if the market comes against you, it will stop you out, but it stopped you out at 20 pips in profit. So whenever you guys are moving your stop loss in profit, you are securing that equity in your account. So even though it's an open trade, that equity is already secured. You know, if that trade moves against you, there's a certain amount of money that is automatically yours. It's already secured. So that is trailing stops. And again, as we continue into a deeper series of trade management and risk management, we'll get into these details more deeply, but this is more of like an introduction to what we're doing here, right over here. Now, from here, what is taking partials? So if you take a look over here, you'll notice I had 5 lots on gold with my stop loss and profit. And now on this next trade, I now have 3 lots open and the stop loss is still there. Why? Because I took partials. So I took a 2-lot partial. So I was able to secure $1,000 in profit. So what is taking partials? So in the context of forex trading, taking partials typically refers to a strategy where a trader closes only a portion of the open position. So if you're in a trade and you're in profit, okay, and you want to manually, let's say the trade did not hit your take profit yet, right? It didn't hit your take profit yet, but you're in a good amount of profit, and you're saying, man, I don't want to close out that trade, but I want to, I want some money. You can do what's known as a partial close, and you can close any amount, from a 0.01 all the way to 100% of whatever your position size is. Okay, you can take partials. The larger partials that you take, the larger your partial profits will be, but the smaller your initial entry will be. So your initial entry will get cut down, and the open or the floating profits will also be reduced because you already put the rest of the profits into your account. Okay, so this is what trading partials. So again, look, in the content of forex trading, trading partials typically refers to a strategy where a trader closes only a portion of their open position instead of closing the entire position at once. Traders do this to secure profits on a portion of their trade while allowing the remaining of the position to continue running in the hope of capturing further gains. So taking partials is a great thing that you should do. Now from here, what is stocking orders? So you'll see here, gold continued to go down, right? So from initially being in profit and taking partials, gold continued to run So what I did is I did something known as a stacking order. Now, there are lots of different methods and tactics on how we do this. But stacking orders basically means that when you are in a trade, so let's read it here. In forex trading, stacking orders refer to a strategy where a trader places multiple orders at different price levels in the market, aiming to take advantage of price movements and fluctuations. These orders are often placed with specific objectives, such as entering the trade at a favorable price, setting more targets, and managing your risk. Stacking orders allows a traders to implement complex trading strategies, automate all that great stuff. So long story short, let's say I was in this trade and I had a 1% risk and a 4% gain, okay? And this is my original entry. Now, if the market starts going into profits, I put in a second order, a second position right here. As you can see how I put in a second position right over there? So that means that from here, as that market was gaining, I not only had one position open, I had another position open right over here. And this position is giving me another, I don't know, maybe 2% if it hits the TP. And if the market keeps going, there's strategies for this. But if the market keeps going and then I want to put another stack, right? And it hits the TP, I can gain another 1%. So basically, I took a trade that was going to position, got another 2%, entered another position, got another 1%. So once I seen that this market was going in my favor, I said, you know what? I have some equity floating. I reduced my stop loss. I'm completing this trade. I feel confident. I feel good. I'm going to start adding extra orders. And I turned what was a 4% into a 7% gain on one single trade in the market, which is phenomenal right over there. Absolutely phenomenal, right? And now that wasn't the actual trade. The actual trade was over here on the 15-minute that I was showing you. But anyway, yeah, so that is stacking orders. So you guys are going to learn in the future how to stack orders to continuously multiply your gain in the account. And when you're stacking orders, you still have to follow the same risk management rules and the trade management rules. And now the very last thing that we're going to talk about here for trade management is simply avoiding news events. Now, we introduced you guys to fundamental analysis. We showed you guys Forex Factory, and let's talk about avoiding news. So avoiding news events is often considered useful in Forex trade management for several reasons. So let's talk about it. News events, especially major economic announcements, which are those red folders, or geopolitical developments, can lead to significant volatility in the Forex market. So sudden price fluctuations can trigger stop loss orders or margin call you, right? Leading to unexpected losses for Forex traders. So avoid trading during these events can help minimize the risk of being caught on the wrong side of the market during rapid market movements. Okay, so while some experienced traders do specialize in trading news events, it requires a deep understanding of market dynamics, quick decision making, and the ability to effectively manage your risk. So for novice and intermediate traders, avoiding news events is going to provide you a more stable and a more controlled trading environment, which is going to promote better trade management and better risk management practices. So you guys want to absolutely avoid the news. So these are the 6 concepts for trade management. All righty. Now, as we get ready to wrap up volume 3, okay, in volume 1 and bootcamp part 1, we talked about what is Forex, the history of Forex, lots and lot sizes and position sizes and pips, and we talked about all that good stuff. In Forex, in volume 2, part 2, course 2, we actually talked about, as we said in the beginning of this class, market analysis, entry order types, different things like that, actually getting involved in the market. And now here in market, in volume 3, we're starting to actually talk about the money management rules, right? The basic risk management, giving you the tools, the trade management once you're in the market. Okay, so I hope you guys can see as we're going through this boot camp that we're setting a solid foundation for you guys. So feel free to rewatch this boot camp, really try to get some of these key concepts in your mind, because when you first hear them, they may be a bit new. It might be a lot to grasp, but if you rewatch the video, you pause it, you rewind it, you re-listen to it, it's really going to start making sense. And if it makes sense, it's going to make dollars. And as you begin to apply yourself and actually get involved in the market and start trading on the demo and the live account or the funded account and going, you're going to see that these practices that I'm providing you are going to help you for the longevity. All right. So today we went over basic risk management, real-time use, risk to reward ratios, the benefit of them therein, different examples of how risk to reward can help you be less accurate but more profitable, how to use a compound management rules once you're in a trade, which is breaking even, going risk-free, trailing your stops, taking partials, stacking orders, and avoiding news. All right. So with that being said, we are going to get ready to exit out and complete today's FX Breakthrough Bootcamp. All right, day 3, volume 3. As a reminder, these courses will be uploaded and available for stream. You guys will absolutely be able to watch them. So I want to thank everybody for tuning in. Again, my name is Manny Q. I am your host, your trainer, and your coach. Thank you guys so much for tuning in. And I look forward to seeing you guys on volume 4 as we start to get into actual trading view and the actual basics of the market, highs and lows, market structure, support and resistance, and how to draw those out. So thank you guys so much for tuning in, and we will see you guys on the next training. All righty. Now, guys, from there, what I want to say as I get ready to stop this is that if you
Okay, all right, guys. So who like I watched this video and I was like, this is absolutely crazy. All right, with a win rate of 30%, only 30%. With a win rate of 30%, you're really able to scale your account and grow it. Okay, with the scanners that we have here, absolutely the trades that you've been taking, 30% is on a very low side. With the scanners, the accuracy, people who have been trading with them each and every day at 9 and New York session and London session, you have been able to see the accuracy is plus 80%. It's plus 80%. So you can imagine just having a 1:3 risk reward and having now what we have in this. You've been able to see Money Q has been able to show you and guys, this is some of the products that you get on Jifu, the education, which is very, very, very important to help you growing your financial journey. So you can imagine if you have your 10 trade account and you have the $1,000 account, okay, and you getting into the 30. Let me show you this thing. Let's go back to this
risk to trade. I have 6% wins, and then
this section actually just really caught my attention. Like this section really caught my attention. Okay, you can be able to see 10 trades, total wins. You've only won 3 trades, right? You've only won 3 trades. Total trades that you've been able to lose is 7 trades. You'll be able to be on a plus 2% gain with a risk of 1:3. Okay, with a risk of 1:3. I'm telling you this for sure. With the scanners, you're not losing 7 trades and winning 3. You'll actually, it will be on the other side. You'll be winning 7, you'll be winning 7 and losing 3. Okay, so you can imagine if you have your $1,000 account and you've been able to see the compounding effect of $1,000 here, the one that she has been able to share these documents. So you see, those guys who have the Jifu package, I'm following up on this. I'll be able to share with you the link to get access to this document, whereby it calculates for you the lot size that you're investing the amount. So it's showing you that you can grow your $1,000 up to $1,000,000. Think about that for a minute. Think about that for a minute. Okay. So I want you to do this, guys. Getting access to the Jifu scanners and all this education platform. You have two packages. You have one which is $149. With the $149, you're able to get limited access to the scanners. You're able to get limited access. That one is just like for a trial to see how the things are working. Okay, but the best package is 275. The 275, you're able to get access to all these videos, all these trainings, all these tools that we're sharing with you here, and also you're able to get access to all the trading scanners that we have here at Jifu. So if you want to get started right now, what you want to do is go back to the WhatsApp group that you're able to join this call from and send a message to the admin. Tell them, hey, sign me up. I'm ready to get started. Okay. So on the other part is we have the 10 trades, platform. So with the 10 trades platform, this is where you're able to get instant funding. Okay, instant funding, and this is where I was telling you if you have for example, we have this event that will be happening on the 26th. We have the event that will be happening on the 26th. Okay, I'm not sharing my screen, all of it. Okay, guys, I want to how was that session? I'm not seeing the comments. How was that session? Did you learn something today? How was that session by Manicure? How was that session? How was that session, guys? Drop your comment. I want to see your reviews. If you're able to learn something from that session. So with the 10 trades, this is what will be happening, guys. You can be able to get access to an instant funding account. Okay, so I want you to do this. If you have not registered for a 10 trade account, we're sending the link in the group. Make sure you register for the account. Okay, because after 26th, after the launch, what we'll be having is we'll be having like a 5 days bootcamp. Okay, on the 5 days bootcamp, what we'll be doing is we'll be showing you how you can be able to trade. We'll be doing live trading sessions. Okay, that's the first thing. After doing live trading sessions for 5 days, these are the people who will be able to have gotten their trading account, because my goal will be to help you pass that account, right? My goal will be to help you pass that account with the risk management tool that we have and with the scanner. So we'll be trading live with you each and every single day. I want you to register so that at least you can get a minimum of this $1,000 account. So you've been able to see if you're targeting only $30 and only if you are targeting only 30% each and every week, targeting 10 trades, you can be able to have 2% up on this account. Which, if you're using the scanners, you've been able to see that is way much lower. Okay, that is way much lower. So if you're able also, you can get the $10,000 account, which will be good, because what will be happening is this is money that you're given instantly. If you pass getting to 10%, you can be able to withdraw. All right, and also we'll be having a bootcamp showing you how the 10 trade works, the rules, the consistency rules, and everything, how to use those lot sizes and everything. So after that, now we can start now trading live with your accounts. Okay, trading live with your accounts so that it can help you pass this platform. Okay, so that's the end of today's session. Hope you loved it. Hope it was insightful. The other thing is the 10 trades event on 26th. If you are in Nairobi, guys, if you are in Nairobi, make sure you have registered. Okay, this is the event. Make sure you have registered on the event. There is a Google form that I'm dropping in the groups. There's a Google form here. Just make sure you've come, you've filled in your email, you've filled in your name, and then after that, you'll be given a confirmation message on what to do so that you can get your ticket of getting into the event. Okay, we'll be having just a digital ticket, which will be your wallet, your 10 trades wallet registration. It has to be there. Okay, so I'm super excited to see what is going to happen this week for the market. Tomorrow, we jump into analyzing the market. Have a good night. Have a blessed Easter. Let's meet tomorrow as the markets open. Cheers.